we're waiting for Chris. And Jonathan has this now streaming live on YouTube. Thank you, Jonathan.
Are you going to share a screen? Anybody? Staff? Jonathan?
Yeah, we could do that.
I think it would help. It would help me because I obviously can't pull up two devices with only one in my hand.
Okay. Jonathan and or Denise, could you please take a moment and pull up our packet?
Yep, I've got it ready.
Thank you.
Does that come across for folks?
It does.
Perfect.
Nice. Thank you.
Did Chris say he was going to pop in?
Have we heard from him, Denise? I don't think we've heard anything extraordinary.
I haven't heard that he wouldn't or would be here.
Mhm.
I can make a phone call or I can make a phone call real quick.
Okay. So Chair Leffel, it's at your discretion as to when to begin.
Yeah, I'll give him another minute just in case.
It's on my desk.
Karen, is it a boy or girl?
It's a boy.
Good.
So we have one of each. This is little baby Carson, who's just super laid back and chill is what we call him. He's a sweetheart.
If it's possible to zoom in a little bit more once you get going. To zoom in on the agenda? Well, just for each item, because it's so tiny now. If it's possible. Hi, good morning. This is Denise Munoz of LAFCO, Monterey County. How are you doing today? I wanted. Yes, we didn't know if he was going to be able to make it or not. Oh, awesome. Thank you so much. I appreciate it. Okay, have a great day. Thanks. Bye.
Was that call for me, Denise?
It was there, Commissioner Lopez.
Sorry about that. My last meeting ran a little late.
Thank you for being here.
Of course.
Hey, I'm going to call the November 4th budget and finance meeting and audit meeting of LAFCO to order. And if we could do a roll call, Denise.
I can provide the roll call.
Okay.
Chair Marianne Leffel,
Yes.
Commissioner Chris Lopez,
Here.
and Commissioner Ian Oglesby.
Here.
Great, thank you. I'd also like to note that we have some special guests today. Karen Campbell from Bianchi, Casavan and Pope, our auditor, and also Mike Briley, our CPA and partner at Hayashi Wayland. In addition, we have our clerk to the commission, Denise Munoz, and assisting us is Safarina Maluki, here for the first time. So please welcome all of them. Thank you.
Perfect. Thank you. At this time, I'm going to ask for public comment for any item that is not on the agenda. And please limit yourself to 3 minutes. Do we have any public, Jonathan? Okay.
To answer that, we do not have any public
Okay.
participation. Thank you.
Thank you. Under new business, one that's near and dear to all of our hearts, which consider the actuarial report on government accounting and financial reporting. So if we could have that report, that would be great.
Yes, thank you. This is agenda item number 1 in your packet. And what we have here is a report that is prepared on an annual basis by McLeod Watts from Portland, Oregon. And the primary purpose of the report is to provide information to our commission about post-employment benefits other than pension. And this information ties or is used directly in preparation of the annual audit. It indicates that at the present time, the liability is a net is $90,300 with an OPEB expense of $2,100. That information has been reflected in the draft annual financial statements. I'd like to request that Mike and Karen please assist me now in presenting this information.
Okay, I'll start out and then Karen, you can add your input when I'm done. So this report is 30 pages.
Was reported on Pennsylvania 66 Turnpike.
Sorry, Mike, we got
that's okay.
too many things going on here.
That's okay, no problem. So the report's 30 pages long, and when Karen gives her audit report, you'll see that it also takes up 8 pages of the footnotes of the audit report. So it's just a ton of information. If I could summarize it for you, I would, and it's hard to do that, but I'll try my best. It's essentially the liability that exists on the books of the commission for future health benefits for employees that are currently retired or will be retired. Going to calculate that number, they use all kinds of approaches with actuarial evaluations, estimated life discount rates, interest rates, and they put all that into their magic hat and stir it up. And the numbers that they came up with were the numbers that Kate mentioned: a 90,000 OPEB liability and a $2,100 expense. So we're on a pay-as-you-go basis, which means we pay in what we're told is that year's actual expense. The liability reflects the total liability for all the people looking into the future. So that sits on our books, and we chip away at that year by year as we incur annual expenses. So I'm not sure if that helped or hurt. We're going to talk about this more when we get into the audit report. So Karen, I'll pass it to you if you want to add a few words to this now or wait until you talk about it in your report.
Gosh, Mike, I think you did a great job covering the basics, and I think maybe we could just ask if there are questions. We will touch on this, and these numbers are reported in the audit. So I think you hit the nail on the head. This is, as you said, this is not the pension liability. This is the other post-employment, future health care payments. So yeah, no, I think we're good as far as I'm concerned.
Commissioner Oglesby?
Thank you so much.
I'm sorry, Commissioner, it's hard to understand you there.
Sorry, Ian, but we're not getting it. Nope.
Sounds like Ian has that South County internet today.
It's giving us a thumbs up, though.
Okay.
And
Commissioner
no questions for
Lopez?
me, Madam Chair.
Okay. I talked to Karen at great length about this, and we can talk about when we get to the audit, but I'm extremely concerned in everything that I see in that this will more than likely continue to grow over the next 10 years based on all the estimates from all the actuarials that I have heard. And I sat in on 3 presentations during the California Special Districts Association conference, and none of them had rosy outcomes. So I think this is something we're really going to have to look at into our next budget year. Just give you a warning on it. It's not pretty. So this is just to receive the report. So if one of you could make the motion on receiving the report, we can move on. And
So moved.
Chris?
So moved.
I think we had a second from Commissioner Oglesby. all in favor? Aye. Can we have a thumbs up?
Okay, we've got that recorded. Thank you.
Okay, thank you. Item number 2 on our agenda is to consider the draft annual audit for the fiscal year ending June 30th, 2021. And this will be a discussion and then hopefully an accepted action. So Karen?
Kate, did you want to share anything first or just let me?
No, you can jump right in, please.
All right, sounds good. Thank you. So thank you all for your time today. We've got a lot to cover on the agenda, so let me share. What I'd like to do is share some highlights from the audit process and the audit report in front of you. And I would encourage you, if you have questions at any time, just wave, let me know if you do, and we'll leave it open for questions at the end as well. Bianchi, Cassavant, and Pope performed the audit for LAFCO for the year ended June 30, 2021. The audit, the financial statements was performed in accordance with generally accepted auditing standards and government auditing standards. Our opinion is what's known as an unmodified or clean opinion. That's found at the very beginning of the report on pages 1, 2, and 3. We have also issued a report, an opinion towards the back of the financial statement draft. That is an opinion over the internal control over financial reporting and compliance. And just to share with you, the results of our tests noted no instances of non-compliance, and we did not identify any deficiencies in internal controls that would be considered material weaknesses. So far, so good. We have a clean bill of health there. Further, we did not issue a separate management letter identifying any deficiencies in internal control that we'd want to share with this group. And finally, before we get into the report, I just wanted to say out loud that as a part of this process, we will issue a companion letter called the communications letter. And in that, there's customary language included in the auditor's communication letter. But I wanted to highlight for you that once again, this year, there were no audit adjustments required as a result of our audit procedures, that all significant transactions are recorded and recognized in the proper period. The timing of the audit went well according to the schedule. Your team and I meet early in the process, and we map out the dates through which various items should happen. And as it typically goes, your team always hits their targets, and so we're in good shape time-wise. We encountered no difficulties in performing the audit, and there were no disagreements with management. So I'm going to stop right there before we get into a few items in the report I'd like to cover, and just see if you have any questions to this point.
Okay, before I open up to the commissioners, I'm going to ask, is there anyone from the public has a comment on the audit report?
Madam Chair, no hands are raised.
Thank you, Jonathan. Okay. Fellow commissioners, do you have any comments so far?
Not
No
so
comments.
far.
Yeah, no comments so far.
Okay, thank you. Karen, go ahead.
Thank you. As Mike Briley pointed out, the reports continue to get the OPEB reports, the GASB reports, and your audit report continue to get larger and larger each year, primarily due to all the required disclosures surrounding the GASB 68 pension liability, as well as the OPEB. And this year, again, the report includes some language relating to the FORA activity. And I know you're quite familiar with that, but we'll talk about that in detail in just a moment. I don't know if you'd like, Commissioner Leffel, if you want, I could ask Jonathan to pull up page 5 in the audit report. If you want to do that, I can, and comment on a couple items on this page.
Yeah, if you could, Jonathan, share that screen.
Sorry to throw that at him, a curveball. While he's doing that, oh, there, okay. Thank you. Sorry, Jonathan. Okay, here we go. Okay, so scroll, keep going down about 5 pages or so. Keep going, 2 more. Well, there we go, right there. Oh, back, right, page 5, if you can see at the top of your cursor, right there. So if that's, there we go, beautiful. So this is the statement, LAFCO statement of net position, and it reflects your assets and liabilities. And I guess the couple of things that jump out to me, and I know Commissioner Leffel will want to speak to this later in terms of just the impact of the liabilities down the road. But if you can scroll towards the bottom of this page, Jonathan, for me, I think this will be the last time I'll make you move. Okay, so down at the very end of this statement is a section called net position. That's the excess of assets over liabilities for LAFCO. And the very last line that's unrestricted refers to note 4 is in excess of $1 million. Now, it's important to note that that balance exists even though the LAFCO, excuse me, the GASB 68 and pension liability and the OPEB liability have been recorded on your books. And so I guess it because you're a smaller organization and you have a history of being pretty conservative with how you approach various items, you're able to have a positive net position where many governmental agencies end up with a deficit once they recorded that massive GASB 68 pension liability. So it's worth noting. There are many agencies that don't look quite this solid. Again, there'll be liabilities in the future, and the calculations, to Mike's point earlier, the actuarial calculation for the pension liability, I don't even know how many pages that is. It's probably twice the size of the OPEB, and the details to which they project the layers upon layers of calculations, going forward with interest rates and earnings and mortality tables. It's extraordinarily complex. One thing we can say for sure is that liability is going to continue to get bigger each year. It's not going to get smaller. But at this point in time, it appears that you're keeping fairly current with that liability and still in a fairly sound position. So I just wanted to kind of call that out to you. The other thing that, let's see, am I ready to turn a page here?
Hey, Karen?
Yes, Mike.
I just wanted to add something on that point before you moved on. I wasn't sure if you were done or not.
Yep.
Well, I think it's important to remind everyone that there has been cash set aside in the county treasury designated specifically for the net OPEB obligation. So it's disclosed in footnote 2 on page 18, and it's reflected. It's part of that $1,199,000 of cash and cash equivalents on page 5.
Thank you, Mike, for pointing that out. And that's to Mike's point. This is you follow a pay-as-you-go method for the OPEB liability. And so again, from a conservative standpoint, you've earmarked portions of cash to finance or to pay for that liability. So that is very important, Mike. Thank you for sharing that.
Yeah, so the pay-as-you-go is the official determination or criteria. I'm not sure the right term that the OPEB valuations calculations describe the district's position. In addition to that, we've been very conservative to set aside this 90,000 so on our own books. So I just wanted to make sure that the commissioners were aware of that. And again, that's disclosed in footnote 2 of the audit report, page 18.
Perfect. Thank you, Mike. Any questions here? I was going to ask Jonathan just to page forward real quick. Any questions right now?
Commissioners,
Okay.
anything?
No questions. No questions.
So
Thank you.
I'll jump in. Just a quick question on that in terms of strategies to mitigate that risk long term. Is there anything that we've seen other LAFCOs or other government agencies do? I'm concerned about, in particular, the assumptions around inflation rates, especially with where we're at and where this number might go quickly, while we know that our everything sitting in the treasury at the county is not gaining as quickly. And so I'm concerned about year over year where we might end up if unfortunately the feds can't control what's happening.
I guess one option would be, as Commissioner Leffel alluded to, is to start addressing this in the budget as a line item and to begin to set aside additional monies through the annual contributions that we receive from local agencies, for this purpose.
Okay, thank you, Kate.
Welcome.
And we could pay more than what they are billing us for and what they tell us our minimum is. So we could actually pay down on that 90,000 at any time, which would reduce the interest that we pay and reduce the liability overall.
Just something to consider. I'm just looking at the assumption on a 2.5% inflation rate, thinking I don't know anything that's moving that slowly right now, and I'm concerned about where we'll be in a year or 2 years from now if this isn't a blip as most people have predicted. So thank you.
Yeah, I think the assumptions that I saw in at the CSDA, I think they were that they'll make 8% this year with PERS.
Mary Ann, just to add something to that, if it's okay.
Sure.
So to your point about paying more than the minimum, so we don't need to go back there, Jonathan, but they're on page 1 of the OPEB report that we just covered. It talks about funding policies, and we are under the pay-as-you-go, which is essentially paying the minimum required amount. But there is a category called pre-funding, and it's a term used when you contribute the amount based on the actuarial determination. So that is another strategy. So I think all the comments are, Commissioner Lopez, your comments and Mary Ann's as well are valid, and that would be I think one of the obvious strategies to pursue. And the commission, excuse me, is in a positive cash position to be able to do that, which is not the case in many governmental agencies, as many of you know, because you're living that day in, day out. So right now there's plenty of money set aside to do that if that's what the commissioners choose to do. Not only is it set aside in the designated portion of cash, but there's also about, as of June 30th, 253,000 of cash undesignated. held in Monterey County, and also 189,000 of cash in the bank. So because of all of the prior and current commission's conservative and prudent oversight, you're in that position now. And of course, Kate and her team too.
I do think it's something we're going to have to take a look at when we get into this new budget cycle, when we develop the new budget. So I'm throwing it out there now. If we can look at different scenarios, and I think I have about 7 scenarios coming out of one of the workshops I sat in, which were he really presented them well. I think I finally understood every single bit of what somebody said to me on this topic. So anyway, we can look at it during the budget cycle, but I did think, just looking at the audit and seeing how that number continues to grow, no matter how prudent we are, it's just frightening, because we are at the mercy of a lot of factors. Did you want to go forward, Karen?
Yes, if that's okay. Let's see. I think, Jonathan, they're perfect. Thank you for advancing. If you would go down another page as well, Jonathan, this is, by the way, while he's scrolling, that's just your comparison of revenues and expenses for the current year to prior. And as we go to the last half of that section, which he's pulling up right now, the one thing I did want to call out to your attention, just because it's new this year, that relates to the FORA administrative fund activity. You will note a line item under the second caption, non-operating income. The first line, there's fees revenue of 38,000. Now this was fees earned in connection with, I'll use the word time spent by LAFCO staff to handle administrative matters for FORA. And you'll recall, this is separate. This is the $100,000 amount, separate from the $500,000 litigation reserve. So this is just showing you that 38,000 of that $100,000 has been earned and recognized in this year. That's new for you for this year. There's still then 61,000 left to be earned as needed, depending on the activity that arises. Okay, so
Fortunately, we asked for that money.
Yes, yes. Thank you, commissioners, for your encouragement on that front.
Good call. You know what I'm going to ask you to do now, if I could, Jonathan, is page ahead 2 or 3 pages, if you don't mind. And we'll just take a moment to keep going. One more blank page here, next page up. This is, okay, you can stop here for a moment. This schedule, this statement reflects the balance of what's left in your $500,000 litigation reserve funds. So what this shows you, last year at 2020 at 502,000, which was your principal of 500,000 received plus some interest earned last year. Now you've got 346,000 left after a good chunk of litigation expenses were incurred during this past year. So if I could ask you, Jonathan, to scroll down to the next page, that will just reflect your activity for related to the $500,000 litigation reserve. So you earned 4,000 in interest income there, the first number in that first column, and then had legal fees of 147,000. So you work through that. I don't know where you are currently in terms of how much more has been, expended of that, but that's where you sit at June 30 of 2021.
I can comment that very, very little has been spent over the summer and into the fall, probably $5,000 or less.
Great. The next thing, or the last thing I think that I really want to highlight, and then I'll just open up for any questions, is, and if I could ask you to scroll all the way to the back, Jonathan, all the way to the bottom, and we'll talk a moment about budget to actual. So just page down to, we're going actually to page 50. So a long way down. While he's getting there, that page reflects LAFCO's budget versus, here we go. So here we have the year-end June 30, 2021, with your budget amounts reflected, and then as compared to your actual amounts, with your variance in the far column. And all of you who have governmental agency connections, it will recognize how that works. You've seen it before. So one thing just to remind you of, because you're typically fairly cautious when you, you're very cautious when you prepare your budgets. The very last line under the category of revenues is from unreserved funds. So you budgeted to potentially need to pull in $158,000 to help assist balancing your budget. You did not need to do that, so that it kind of reflects as a unfavorable, but it's not really. You didn't need to pull in from unreserved funds. So when we look at the variance with final budget, favorable, unfavorable, that bracketed amount of 109,000, I would just caution you to say that's not negative in your specific case, because you did not, pull in those unreserved funds. So it's kind of a double negative. It's actually a positive. And then if you'll scroll, Jonathan, I just want to point out at the end of your, here we go, at the end of your total expenses, you'll see that in fact LAFCO budgeted for a 1.129 million in expenses. They spent, you spent 1.1032 million. So you have a favorable variance in your expenses of 96,000. So again, that's whatever, good to see. Hard to find, but good to see. There were some categories that were higher. I think there were 2 or 3 items that kind of drove that savings, salaries, and I think professional services, equipment are the traditional suspects that often cause that. But anyways, a favorable presentation. Okay, so I'm going to stop talking for a little bit and see if there's anything that you guys would like to talk further about or cover. As you know, there's a lot of meat between the first pages we were looking at 5, 6, and 7. There's pages of disclosure information related to pension and OPEB. Mike pointed to the details of your cash balances, your net assets. There's a lot of information in there. I'm not trying to gloss over it, but I'd like to give you an opportunity to ask any questions that you might have at this point.
I'll open it up. Commissioner Oglesby,
No questions.
Commissioner Lopez.
No additional questions at this time. I think I just deal with that we're in a great position given what's happening. And I appreciate the work knowing that as we go into our budget next year, I think we're going to have to make some changes given the context and some of the comments the governor's made recently around pensions. And so I hope that we can turn some of that into additional opportunity for those of us who've been more conservative and aggressive in paying down our liabilities. But just want to make sure that that's on staff's radar, given that $11 to $14 billion surplus the governor's talking about putting towards assisting agencies with pensions. So just wanted to put that out there. Thank you, Mary Ann.
Thank you. And I have no questions on this. It's very straightforward. I think staff did a great job coming through another year with some interesting blips in it. This next one will be even more interesting. So we'll deal with this when we get to the budget.
Mhm.
Thank you, Karen.
You're welcome. Thank you. And thank you to your entire team, the accounting team. Really, I say this every year, but I'm sincere that your team is very responsive, helpful, organized. We get the data. You're all-star client. We appreciate all the work that you do for us, and including Mike and his team that basically gets you audit ready and gives you such a great result.
Terrific. So if I go back to Jonathan, do we have any public participating?
I do not see any members of the public attending.
All
at the
right.
moment.
I want to make sure if anyone's there that I give them an opportunity to ask any questions. I'll close this, and I would ask for a motion to approve the receipt of the audit.
So moved.
Second,
We have first and a second, and we'll do a roll call vote.
Right. Commissioner Oglesby,
aye.
Commissioner Lopez,
Aye.
Chair Leffel.
Aye, thank you.
Thank you. This item will be forwarded to the full commission for consideration with your recommendation at the commission's regular meeting on December 6th.
Okay, that'll be a fun meeting. Can't wait.
Mhm.
Item number 3 is considered the draft year in financial statements for fiscal year ending June 30th, 2021. Mike?
Oh, Mike, I believe you're on mute.
Yeah, excuse me. Thank you. Section item 3 on the agenda is the financial statements as of June 30th, 2021. So this is the basis of the audit that Karen just did. So we provide her these financial statements. She does her work, and what she just presented is the outcome of that. So there's nothing new in item 3. Really, the new information is in item 4, Chairman Leffel. So unless someone has any questions specifically about item 3, it was covered in the audit. I would say we move on to item 4, but that's up to you.
Okay, so I would entertain a motion on item number 3, if there are no questions.
Oglesby move item number 3.
Lopez seconds.
Okay, if we could have a roll call vote, please.
Commissioner Oglesby,
Aye.
Commissioner Lopez,
Aye.
Chair Leffel.
Yes, thank you.
Right, thank you. This item will also be considered for approval by the commission on December 6th.
Perfect. So we'll go to item number 4, which is considered the draft financial statements for quarter 1, period ending September 30th, 2021. Mr. Briley.
Okay, Kate, would you like to open with any comments, or do you want me to start
Oh,
off?
Yes, please start off, Mike.
Okay,
Thank you.
so we're closing the door now on the prior fiscal year, and we're reporting on current fiscal year information. So these are the first quarter's financial statements for the period ending September 30th, 2021. And starting out with the balance sheet on page 2 of these statements. This format obviously is a little bit different than what Karen presented. This is the normal interim financial statement presentation that we present to you each quarter. The first thing I want to point out, which may have been of some concern to people, is the cash position is very consistent. I don't think we need to talk about that unless anyone has a question, but I'm going down to about a third of the way down, accounts receivable for fiscal year end 6/22, account 1234. And there's a balance as of September 30th of $509,000 and some change. So there were quite a few people who hadn't paid their invoice, districts or various entities, but we made a lot of progress from September 30th to date. So there is a supplemental schedule showing how that $509,000 is broken out in the back of the report, but I'm not sure it's useful to go through that since that's kind of old news right now. Kate, I know that you have a updated one. I have it in front of me. I'm not sure.
Right. And I think Denise can put that up on the screen, please.
Don't you think, Kate, it'd be better to look at that?
Yes.
I totally agree. There's no
Yeah.
point in looking at who was delinquent then.
Right.
Yeah.
And before Mike continues, I would, in defense of our wonderful cities and special districts, many of them did not even receive their invoices from the county auditor until the middle of September. And that is also not the fault of the county auditor. As you know, the cost allocation worksheets for both the cities and special districts rely on revenue data. And there was just a lot of difficulty in securing revenue data so that those cost allocation worksheets could be completed and the invoices sent out. So the moment that that revenue data became available, the county staff did complete the worksheets and prepare and issue the invoices. So a lot of that happened in mid-September. So really no one at all is delinquent at this point. And we only, here's the latest accounts receivable as of just a few days ago. And you can see that we're talking just about a half a dozen agencies, and with the largest one being the city of Salinas, but again, they've just barely received our invoice. So we expect by December to have all of these cleared up.
Yeah, historically, we really haven't had a problem with collections. Almost everyone pays, I don't know, within 30 days, but certainly, you know, very quickly after they receive the invoice. We have a few stragglers, and we talk about those, but I just wanted to make sure that people understood when you're looking at that September 30th statement, you see that 509,000 number, that, you know, there isn't a panic or anything. It's under control, and this statement on your screen right here gives you the latest snapshot. I don't know, Kate, you and I haven't spoken about the anticipated payment date for City of Salinas or COD, but I'm assuming they're going to be paying soon. The rest of it's just a few $100s, little things, little districts.
Yes, we don't expect problems with any of these contributions.
I think last year, Kate, we asked you to kind of keep an eye on it. So maybe by the 15th of November or something, if they haven't paid, maybe you can just make a phone call.
And
my guess is that nobody would like to be on a public list on December 6th.
Oh, right. Yes, we'll check into that before our next regular commission meeting, and I'm sure we'll have great progress.
Was Marina's full billing $1, or did they make a mistake in paying?
We're not quite sure. They definitely paid, and so we're not sure quite what happened. So we'll figure it out, or I'll kick in the $1. But I believe that Stephanie from Mike's firm is looking into that, so we can clear it up.
Yeah, when I saw that, I kind of laughed. I said they must have just written the check for $1 wrong.
Yeah, somewhere there is a little bit of a misprint.
Okay. Well, if you would just keep on top of it, and
Yes.
hopefully we won't have to put anybody's name in lights on December 6th.
Yes, we'll do that. Thank you.
Okay, thank you. Mike, back to you.
Okay, yeah, so the rest of the information on the balance sheet of September 30th is really consistent with prior years and not a lot different from the numbers we just went over at June 30th. So nothing really stands out to me to be discussed, but if anyone has any questions, we can talk about it. If not, I would propose we move on to the next page. Okay, I'll move on. So the next page is the income and expenses for the first 3 months of the year. And yeah, thank you. Jonathan, are you still driving? Yeah, okay, thank you. I wasn't sure if I know Kate said Denise put that other schedule up, but anyway, thank both of you. Appreciate your helping me through this. Okay, so this is a snapshot of your revenue and expenses for July, August, September of 2021. And you'll see in the first section on income, essentially everything has already been recorded because we record this on the accrual basis rather than the cash basis. So even though someone hasn't paid yet, we're still recording the income because it's recorded when we bill them. So that's why you'll see the total revenue for county contributions, city contributions, district contributions, reflecting the whole year's revenue and very consistent with prior year and the budget for this year. The only thing that really stands out here, and Kate, I'd ask you to just give some background if any is needed. I'm not sure, but the 75,000 received from the water district this year.
Yes, commissioners, that is for payment of the independent financial consultant who is assisting our commission in the review of the proposal that we've received from the Monterey Peninsula Water Management District. The cost of those services that we have contracted for is $75,000 total, and the district and its board of directors was very cooperative in putting those funds up in July. So that's what they are. At this present time, we have spent $50,000 through our first hearing that we held last week, and we hope that we will not need the full remaining 25,000 through the end of this year.
Yeah, thank you, Kate. So when you have a income coming in like that, it looks great when you compare it to budget, because we weren't expecting it. So we're way over budget on the revenue side, but unfortunately down below, that means we're going to be over budgeted on the expense side, but they should offset each other. It shouldn't have any issues. But when you go down to account 7240, about in the middle of the page, outside professional services, other, $12,161 paid in September of 21. And then if you scroll or move over to the middle column, the current year, that's the 50,000 number that Kate just talked about.
Mm-hmm.
And you'll see in the budget line item, there's nothing there, but that's going to be offset by being over budget on the revenue side. So we'll be okay on that. The rest of the revenue and expenses, we've got a couple of areas. Salaries, 106,000 compared to a prior year of 132,000. So it's down, fairly significant amount. That's reduction due to the retirement of Gail in June. And
It's also due, if I may add, Mike.
Sure, of course.
It's also due to the fact that for several months, our principal analyst, Darren McBain, was out and was just on very limited paid status. So we did achieve some salary savings there.
I think it looks, the whole financial statement is pretty straightforward. I didn't have any questions on it. Did you, either one of my fellow commissioners?
None here.
Yeah, I don't have any questions.
Okay. So
Okay.
I think, it was straightforward. Obviously the 75 in was, we knew what it was and we knew what was going back out. So, and also the extended leave of Mr. McBain. So I think everything is good and actually within the scope of the budget. So I would entertain a motion to approve this, to recommend to go to the full board.
Oglesby move approval.
Second.
Okay. Roll call.
Yes, Chair Leffel,
Yes.
Commissioner Oglesby,
Aye.
Commissioner Lopez.
Aye.
Motion passes.
Okay, thank you.
Thank you.
The number 5, we've touched on somewhat, but consider CalPERS retirement plan actuarial valuation reports for fiscal year ending June 30th, 2020, dated July 2021. And we're going to have a recommended, 2 recommended actions on this.
Yes, Chair and members of the committee, in In agenda item number 5, there are 2 different reports that we received this summer from CalPERS. Each report pertains to the different types of CalPERS retirement plans that we have. And one indicates that the approximate unfunded pension liability in the amount of $50,800. The other shows a liability in the approximate amount of $6,050. And we are recommending here that we use some of that, our unreserved fund balance, to pay off those liabilities. We are in the process of requesting from CalPERS an up to the moment type of payoff balance with an estimated timeline of January 1st, 2022. So Mike, I don't know if you have anything else you'd like to say on that, but.
No, unless there's questions. We didn't talk about the pension side of the when we went over the audit report, because I guess we got focused on the OPEB. But I don't know if anyone has questions, we can talk about it. Karen may have some thoughts as well.
The commissions, just before I turn it back to our commissioners or to Karen, this practice of paying off our liability balance on an annual basis, or sometimes every other year, has become a practice of this commission. And we are one of maybe a half dozen local agencies in the state of California that are in a position to stay ahead like this. So I'm grateful for that, and grateful that we tend now to have those nice large unreserved fund balance amounts every year to be able to comfortably accomplish this. So with that, either Karen, if you have anything you'd like to say, or any commissioner questions and comments, we'd welcome those.
I think the only thing I would add, and to Mike's point, we did not spend much time talking about the pension liability during the audit discussion, but that's really because you guys are paying, so currently there's nothing, I mean, it could be much different news, as it is the case for many other governmental agencies. So because it feels that you are doing a very, conservative, prudent job of staying up with that, I didn't spend a lot of time on the pension. So I have nothing further to add other than that.
Well, Karen, I think it's pretty significant, the fact that they've got $108,000 and essentially an asset as a deferred outflow on their balance sheet, when they're only reflecting about a $10,000 liability or deferred inflow. So that's a direct reflection of paying off these liabilities. So it's a very, very unusual situation in a positive sense.
Agreed. Thank you, Mike.
Commissioner Oglesby, comments?
Not really, other than to say, everything looks good. I do support the continuation of paying as we go, meaning paying these things off. Like Kate said, we have a regular practice every couple of years is to catch up. And so I'm comfortable with moving forward.
Commissioner Lopez?
Same here. Proud to sit on 2 boards where we actually do this, and I know it's not a common occurrence. When I tell folks in other parts of the state that we are able to stand in this position because of moves that were made by prior boards, they're jealous. And so just thankful for the ongoing leadership, knowing that this isn't a common position to be in. And that's why I made the comment about, now as we start to hear about the state wanting to step in and assist people, we don't want to be left out in the dark either, and say, hey, don't forget about those who have done the right thing all along. But I'll leave it there. Thank you, Madam Chair.
I agree. So I see no reason why we cannot take these as one motion. One recommended,
So Madam Chair, I'll move items A and B and under item 5 as
All
recommended by staff.
thank you.
Oglesby second.
All right, perfect. Any other discussion? I have none, except, I'm grateful we're in this position, and I'm grateful I don't sit on any government boards that aren't. We'll call for a roll call.
Right. Commissioner Lopez,
Yes.
Commissioner Oglesby,
Aye.
Chair Leffel.
Yes, thank you.
Motion passes. Thank you. This item will be considered by the full commission on December 6th.
Okay. Consider the profit and loss budget versus actual worksheet dated October 29th, 2021.
Right. Thank you. And Jonathan, maybe you could just scroll to that page, please, if possible. This is a report that is prepared every 2 weeks by Mike and his staff. They're quite up to date, allow us to monitor our budget activities in terms of revenue and expenses for each line item. And overall, we're right on track for this, the beginning of the second quarter of our fiscal year. Mike, if you have anything else you'd like to add, I'd appreciate it.
No, I think it's very straightforward and simple. You summarized it well, and I can answer any questions if anybody has any.
Do either of my fellow commissioners have any questions on this item?
None here.
None here.
I had none. So I would ask for a motion for approval to send this to the full board.
Oglesby moves approval.
Lopez seconds.
Roll call.
Right. Commissioner Lopez,
Yes.
Commissioner Oglesby,
Aye.
and Chair Leffel.
Yes, thank you.
Thank you.
Executive Officer Communications. Ms.
Yes.
McKay.
Right. Thank you, Chair. I have some very sad news to report. For personal reasons, our wonderful clerk to the commission, office administrator, Denise, needs to leave us. And we will miss her very much in the time that she's been here. She's really helped to modernize some of our administrative systems, and she's just been a real joy to work with. She gave us notice almost 3 weeks ago and had the courtesy to stay with us for all of this time. We've used this time with the assistance of Hayashi Whalen's Human Resources Services to reach out to for temporary assistance before we began the process of recruiting for this essential position. We've been very fortunate to obtain the services of Safarina Maluki, who is on our screen there with Denise. She was able to begin work with us on a full-time basis this past Tuesday. So she's receiving 4 full days of training from Denise prior to Denise's departure tomorrow. We anticipate that Safarina will be with us on a full-time basis until our recruitment process is complete, which could be several months from now. But we're in good hands with this necessary transition. So I hope you join me in just thanking Denise for her wonderful services to our commission.
Denise, it's been a pleasure. Thank you, and good luck to you.
Thank you. It's been a pleasure working with all of you. And I've really will miss Kate and Jonathan and Darren. They are an excellent team, so helpful. So just, they've always been there for me since day one. So I will truly miss them. But thank you, and I'll miss all of you. Thank you so much.
Thank you. Sabrina, welcome.
Thank you very much. Welcome. I'm delighted to be here and have had some really great days working with Denise and her team. Looking forward to supporting all of you. So I'm here if you need me. Thank you very much.
Thank you.
Thank you, Denise, for everything. You haven't been here long, but you've made an impact, and it's been extremely, your help has been extremely professional, and I just appreciate it so much. So thank you. And Sabrina, thank you for stepping in right now to help us out to get through this period.
Yeah, it was a pleasure to serve all of you. Thank you.
Mhm.
Okay.
Denise? Excuse me, I just wanted to add something. Our team who works closely with Denise and Kate has had nothing but great things to say about Denise. And I just wanted to pass that along, Denise. I haven't had the pleasure to meet you personally and work closely together personally in the short time we were together, but I've heard great things from my team. And they're kind of picky, so that means a lot.
That means a lot. Thank you very much, Mr. Briley. I appreciate that.
Okay. Do we have anything else coming from you, Ms. McKenna?
No, thank you.
Okay,
We're
I would
ready.
accept a motion for adjournment.
Right. Thank you very much to all of you. We'll see you at our special meeting on November 15th.
Okay. Thank you all.
All right, thank you.